Hey, everybody, welcome back. We are on episode 4 of the Money Chat, Money Conversation podcast. My name is Shalise. If you're coming over from Mommy Trader, welcome. If you are coming over from my cash stuffing channel, TikTok, Instagram, welcome, welcome, welcome. I'm glad you are here. I created this podcast just to be able to talk a little bit more about not just our journey, but a lot of, financial money issues and goals that we have and give you like a lot of the in between and background info that I'm not always able to share on the other channels because, the algorithm and different things. And so I figured I wanted to have a podcast where I could just really talk without any edits and without having to worry so much about, algorithms and things like that. So let's continue. If you find any value or you just love the podcast, please make sure you like, share, subscribe, and let's get started. So today we're going to talk about good debt versus bad debt. And I can tell you when we first started on our journey, I didn't really know there was a difference between the two. Every time I heard the word debt, I always thought of something bad. Again, we talked about this in the previous episode where I talked about, the money monster and how these fears get into our minds psychologically. And then we have these negative thoughts, we have these negative feelings about everything when it's just, approach and how we use these tools that we have that determine whether it's a negative outcome or positive outcome. And every time I heard the word debt, especially growing up, it was always a bad thing. You should never have it. Um, it'll destroy your future. And part of that was correct. Going about debt the wrong way can have tons of negative consequences. I mean, tons of them. Um, and we're going to talk a little bit about bad debt first. And bad debt, you know, on top of my head, like credit cards, payday loans, retirement loans. So these are like loans against your 401k. So yes, you can take out loans. You can actually cash out your retirement, which I suggest you not do. Again, I'm not a financial advisor, but I mean, yeah, you shouldn't do that. Personal loans as well. And the thing about these types of bad debts is that they often have super high interest rates attached to them. So a lot of you may have been watching what's going on in the economy, right? Every time you turn around, if you watch my channel, I talk about it often, so you really wouldn't be in the dark about this. But the interest rates, and a lot of times people think that higher interest rates only affect the stock market. Let me just tell you, okay? And this is not just from my experience, but a lot of people who have been investing a long time, people who have a lot of wealth. Higher interest rates affect them the least. See, a lot of people, when they invest, they can withstand, they can wait, they can hold out during bear markets or economic downturns because they don't need the money right now. So a lot of people don't realize is that when these interest rates are increased and they're increased back to back to back to back, you're talking about 0.25 basis points, you're talking about 50 basis points, 0.75 basis points. I mean, what that does is that it affects more of lower income and medium tier income people. Why do you ask? Well, let me tell you. Bad debt. So if you got a credit card, 99% of credit cards have variable interest rates attached to them. 99%. I don't care if they're giving you 0% balance transfers. I don't care if you can get a bunch of points, miles, whatever it is. Most of them, when it's time to pay interest, have variable interest rates attached to them. Well, guess what? Every time the federal government, or not the government, the Federal Reserve, excuse me, because they are separate entities. Every time the Federal Reserve increase the interest rates and you keep hearing like 25 basis points, 50 basis points, that means the variable interest rates on those credit cards go up. And see, what I didn't realize when I was in the muck, when I was in credit card debt is that, and I would see it like, oh, my minimum payment went up. And the thing is that that's why. And what it means is that it's costing more money for you to carry that debt. And guess who reaps the rewards of that? The banks. They are the ones getting the interest that you pay. And I remember thinking, oh my goodness, my minimum payment was $25. So I'm paying $50. And I felt so good. And I didn't realize when you're paying 29%, 25%, 20% in interest, your extra payments isn't making that much of a dent. Okay. Remember, interest compounds every single day, not monthly, not yearly. When it comes to credit cards, it compounds every single day. So every moment, every minute you have or you carry debt, and there's no like 0% APR or something like that, your 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 balance is going to continue to go up, and it's almost going to feel like every time you think you're taking a step forward, you're really taking two steps back. And one of the things I had to learn how to do was when I got my statements, the credit card statements, they will the bank actually tells you this on the statement. They will say if you continue to make these minimum payments, it's going to take you 5, 10, 15 years to pay this off. And so, bad debt takes a lot of the money out of your budget. I remember budgeting, and literally half of our take home income was going towards bad debt. I'm not talking about rent or mortgage or, a car loan. I'm talking about personal loans, payday loans, and credit cards. Literally over $2,000 a month just in debt. And then I would like tell myself, okay, well, if you could get the 0% balance transfer offer, just pay it off within a year and you'll be good. And that never worked for me in the first, I would say, year or two of our journey. It just never did because I kept kicking the can down the road. And that's why I say often is that every time you get extra money, every time you get a tax refund, every time you get a bonus or whatever, an inheritance, wherever, pay off the debt in full. And I've talked to different ones who would pay off half because they still want to enjoy life. And let me tell you, there's nothing wrong with enjoying life, but at what cost? I couldn't feel comfortable going on a vacation knowing I could have used that money to be completely free of the debt. I would rather just wait next year to go on vacation or maybe do something a little close to home or have a staycation versus if I had the money to pay it off to not do that. Because again, the longer you carry debt, guess what's happening? Again, every time they keep increasing those interest rates, your debt is costing you more to carry. All right. And remember, interest compounds every single day, especially when it comes to credit cards. And so if you're one of those people who can do a balance transfer and pay it off before the timeline ends, then that's great. But for most people, and let me tell you, banks know this, most people will not be able to pay it off. I was one of those people. So guess what happens? All that interest that you should have been paying, now you're going to have to pay it all at once. It's really scary. And so bad debt causes you to have anxiety. I remember like trying to dodge the collection call people. Like every time they call, and you start to get hip to the different numbers, and sometimes the numbers will be local numbers, and you're thinking, oh, maybe that's a family member, or maybe that's, a doctor's office or somebody that's local, and it's not. It's them. They are really, really savvy and cunning when it comes to trying to get through to you. Some of these people will even call like your job. They'll call other family members. And that happened to me. They called my sister, like, hey, is so and so your sister? We're trying to reach her. And it's embarrassing. It's frustrating. And I think, again, it was just enough. I got tired. Why? Because I've talked about before that on paper, I made enough money. So there was no way that what I wrote on paper wasn't matching what the bank account was saying every month, right? And so, the whole payday loan experience, I know what that feels like. And a lot of these places are in disadvantaged, disenfranchised areas where a lot of people don't have access to banks. So they'll go to these places and they need money, right? They need to have access to this. So they'll go to these payday loan places and they will sign on the dotted line. Yeah, I'm going to sell my soul to get this $1,000, not realizing when it's all said and done, that $1,000 actually is costing them five, six, $7,000. So it's scary, and this is why financial literacy is so important. And I tell people all the time, look, there has never been a better time in history where anyone from anywhere, no matter what your background, no matter where you came from, no matter your family dynamic, there is no reason why nobody should not know just the basics of financial literacy because of the access of information. And I was talking to one person, they were saying, well, they just don't know where to go. I said, just type into YouTube, what is a stock? What is a mortgage? How to be responsible with credit cards. And there are thousands and thousands of videos out there that will educate you and teach you on these things. I mean, even on there's like webinars on YouTube and other parts of the internet where people who are giving their time and energy for free trying to educate the masses. There are some colleges that you can go on YouTube and sit in a economics 101 class for free. The professor will actually video records his class with permission from the university and put it up on YouTube. And you can actually take the course slowly, a couple classes. So, one of the ways that we've learned how to amass our wealth and build it and grow it is through what they call YouTube University. Stop watching the reality shows. You don't need to scroll on TikTok all the time and really use your time wisely so you can understand these basic skills and terms that you need to know to actually grow, especially when it comes to your finances. And, you know, the wealthy people know, you know what, bad debt is not good. And I'll tell you, wealthy people know how to use credit cards too. And they can turn something that was designed to be bad debt into something positive. So if you have good, money management skills and you've been in good habits in terms of paying off your debt, a credit card could be a great thing for you because you can put all your bills and all of your expenses onto a credit card, amass the points, and then instead of using, let's say, your personal money for a flight ticket to, let's say, Cancun, your airline miles will buy you your ticket to Cancun because you used it to pay your bills. You used it to put your variable expenses like groceries and gas and things like that, but you paid it off every month. That's what the wealthy people do. They don't carry credit card debt with high interest rate. They don't do it. They will either switch to balance transfers, and keep in mind, with balance transfers, there's usually a balance transfer fee attached to it. So make sure you read all the fine print when it comes to that. But they know how to leverage debt so that they can grow assets. Because again, if I got enough airline miles because I've been responsible with using my credit card and I don't have to use my personal money to book my flight to Cancun because it's free, then I can invest that money in the stock market. I can put that money in my home down payment fund. I can start a small business with that. So, some examples of good debt are like mortgages. Mortgage is a very good debt because number one, it's an asset. A lot of people don't think it's an asset, but let me tell you, if you are going to apply for a loan or any type of anything, they're going to ask you, do you own real estate? And let me just tell you, as someone who owns real estate with her husband, that's me, by the way, there are tons of tax write offs and deductions that the government gives you because you are a homeowner. And I'm just telling you that straightforward. It really is. So, getting a mortgage is a good debt because mortgage values or home values increase over time. And I've said it in the videos before, when done right, mortgage or home values should outlive you. There's a reason why the Rockefellers and the Vanderbilts and all of these, like wealthy families have tons of property, tons and tons of property, and they just pass it down the line. They teach their descendants and then they keep it in the family. Property, buildings, real estate. Well, that's what having a mortgage can do for you. Now, not everybody wants to buy a home, and that's okay. But I think most people want to buy a home because rent is expensive, and a lot of the landlords will pass those costs to the tenant. So it's always nice to have, in my opinion, a home that you own because once you pay it off, the only thing you got to pay is taxes on it. You don't have to worry about, like rent going up or things like that. And the great thing about mortgages is that usually people get fixed rates, so you can pay the same rate for 30 years. So which is pretty cool. And then another actually good debt is student loans. Now this may be like, what? But yes, because usually student loans, and depending on the type of degree, can actually provide you with the income you need to build or to gain financial freedom, to gain financial independence. So if you go to school to become an engineer, to become a scientist, to become a lawyer or a doctor, a pediatrician, a pharmacist, well, guess what? Those are usually high paying fields. And as a result, you can get a mortgage, you can invest for your retirement. You can buy, property or metals or whatever it is. And so, and a lot of banks view student loans as like quote unquote good debt. So that's why I have that included, is that it is kind of good debt. Another good debt is like if you get a small business loan, because again, if you can grow your business and you can get it to a point where it can replace your 9 to 5, or you can start to hire people, I'm telling you, that is something that can actually grow into an asset. Mommy Trader, for example. I am literally a salaried employee from my business because my business makes sustainable income. And from earlier last year to now, my income has literally almost 100x. I mean, I was bringing in like $100, $200 a month, and now I scaled it to thousands of dollars a month. And this is something that I do part time, knowing how to scale a business, educating yourself, taking courses, seeking guidance from those who have gotten where you want to be, which is very, 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 very important. That's something that I learned at FinCon, is that don't just take advice from anybody. Take advice from people who are doing who are not just doing, but are successful. If you want to grow and scale your business, seek advice from someone who is making consistent income from their business, and seek advice from people who are willing to pour it back into you because they're trying to help everyone win. And so that's something that I learned as well. So if you take a little loan out to scale your business because you see that there is a need for it, it could blossom into something really, 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 really big. And same with auto loans, right? Everybody, I mean, for the most part, most people need transportation. Not everybody lives in a major city with access to trains and buses. You need a car if you're in the suburbs, or if you're in the rural or country area, you need access to transportation. I would say if you're going the auto loan route, again, not financial advice, get something that's reliable. Don't get something that costs a lot to upkeep, something that has problems all the time. And Kelly Blue Book, which is like a really good car value, just a car information website as a whole, and it's free, um, is a really good resource. But like foreign made cars, Toyotas, Hondas, Kias, Nissans, those are all workhorses. Those cars will run and run and run and run and run, and they don't cost a whole lot to maintain versus a Tesla, who, I mean, a tire can cost $1,000. A BMW, a Mercedes, those cars are not only expensive, but they cost a lot of money to upkeep. So again, this is all good debt versus bad debt. And like I just mentioned, if you access and leverage good debt the right way, like a lot of corporations use debt, they use loans. A lot of corporations have business loans. And so they use those loans to invest in innovation, to create products and services, to hire people, to keep their business offices up and running, um, pay health insurance, things like that. So again, and then they'll keep like a lot of the cash that they make on reserves in case of emergencies or like economic downturns like what we're in right now. So I've learned over the years to, focus more on getting good debt. So that's why we'll constantly get mortgages, 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 and we keep our credit up. We keep our credit score good because we can get the best interest rate possible. I think for investment properties right now, they're hovering between 9 and 10% on an investment property. So you can see that it costs more because it's a riskier asset versus, let's say, a primary home, which you're going to live in. And investment properties, we don't live in them, other people do. So, these are some of the things that we had to learn. And I'm going to have more episodes about, how you can grow and scale your wealth and assets. But again, it's always good to understand just the basics first: good debt versus bad debt. So like I said, if you're getting access to extra monies, put some of that money towards the bad debt so you can get rid of it. And here's the kicker: you got to keep it off, because what's the point of paying off a credit card to put the debt right back on it? Now, emergencies can happen, things can happen, and that's different, but we know the difference. We know deep down in our hearts the difference between a roof leaking versus we wanted to go on a vacation. There's a big difference there. One is an emergency, another is an excursion, and that's honestly, that's the end of it. And so you have to ask yourself these things: what do you want for yourself in 5 years from now? If you're still alive, moving, and you see the way the economy is going, what do you want to? Where do you want to see yourself? And if you want to see yourself better, you have to make a sacrifice, and you have to be on top of what you're doing, because that's something I had to learn the hard way. So leave me some comments down below on your take on good debt versus bad debt, and how you're using good debt to actually grow your wealth long term. Please don't forget to subscribe, like, and share. Make sure you follow me on my other platforms. And I hope you guys have a wonderful weekend, and I'll see y'all in the next one. Have a good one.